I mean, I think the cryptocurrency market 3.0 that we're heading into is going to be a bit different. An asset like XRP actually has the potential to really mature into something that represents a very similar thesis as Bitcoin as a store of value and ultrasound money because of its deflationary characteristics.
We had 112 people in the room that did the survey. They did not want to rotate out of gold, and they wanted to rotate into digital assets.
The cryptocurrency voter, there is no anti-crypto voter.
You've probably heard me mention Uphold before, and there's a reason I keep talking about them. Uphold makes it incredibly easy to bridge the gap between your portfolio and the real world. This has not been done before. Their Uphold Debit Card is the best example of that. It lets you spend your crypto or your cash anywhere Visa is accepted, all while earning 4% back in XRP on every purchase. It's the easiest way to stack rewards on your daily spending. Download the Uphold app for more and get started. Welcome back to another XRP pod. Today, we're going to be jumping into what's going on with Clarity, but not necessarily. It's really the story about XRP versus Bitcoin and what that might look like. So you want to stick around for that. I've got Mickle joining me here in just a minute. If you guys, by the way, if you did not check out the video that we did last week on what was happening around DeFi and TradFi. Now, this hearing at the CFTC was an absolute barn burner. There were so many great clips that our team spent hours and hours going through that, and it was literally just chaos. You had chaos from traditional finance. I think looking at what the CFTC, because even Selig in a way kind of sided with where DeFi and crypto was heading, in the sense that he sees kind of the writing on the wall. And that is, the future is here. This was an unbelievable situation because you had Curtis Duffy in there, Duffy in there with the CME. You had NASDAQ in there. ICE was in there. Just chaos ensued all around. So it was crazy times for sure. So go check that video out. It's over on the main channel so you guys can get there. And today we're going to talk about Bitcoin, XRP, Garlinghouse, the performance of Ripple. We'll talk a little bit about Clarity because there are some potential backup plans here. And I want to bring in, of course, Mickle. He hasn't been on the show in a while, so let's bring him in right now. How are you, Mickle?
Good. It's good to catch up. And I think it's the first time we're doing this in a while with the
cryptocurrency
market going up. So it's a good switch up here.
Hey, listen, we've got the market on fire. What do you mean going up? It's on fire, I tell you. And you look at Bitcoin versus XRP, and we did a show with McClurg last week, and it was kind of interesting. Bitcoin bumps up to 70,000, around a 21% weekly. And of course, XRP surges 46% in the same week. Connor, is it finally time that XRP is going to take its time in the sun? And basically, you got Bitcoiners maybe going into this, or you've got other asset holders starting to look at XRP for the first time. What do you think it is?
Yeah, no, I think what we're seeing is probably a change a little bit in what people find interesting to invest in the cryptocurrency space. Cryptocurrency 1.0, right? Everyone was just kind of excited about whatever, but no one really understood what this technology was going to be for. Cryptocurrency 2.0 was a lot of DeFi initiatives, but I think we found out that a lot of those DeFi initiatives weren't as sustainable as many people thought. For example, Ethereum's TVL is still below where it was in 2021 because, a lot of the stuff that came out of it, while a lot of it was successful, a lot of it wasn't. I think I think the cryptocurrency market 3.0 that we're heading into is going to be a bit different because it's going to be driven by a new participant. I think that participant is going to be larger allocators, people with licenses, people with huge amounts of capital. And one of the things that I think is really going to hit home for them is the actual utility of this technology. No one understands how broken the financial system is better than these large participants. And I think it's going to make the bull case for XRP extremely strong as they step into the market. So I think that's a big reason why you're seeing XRP outperform right now. I think coming out of this bear market with the dust settling, there's going to be things that look materially better than other things for financial institutions. And I think when you see Brad Garlinghouse up there with Trump, when you see Ripple with 70 licenses globally, when you see their TradFi kind of initiatives building to the traditional market with regulation in mind, I think those things are really going to catalyze XRP for this next generation bull run we're heading into that I think will be dominated by utility and financial infrastructure.
All right, so you just said the key word, and that is utility. Do you think we are now seeing, because let's be honest, the typical XRP investor, just by demographics, is between 35 and 60. That's kind of the sweet spot. Do you think we're starting to see a younger demographic starting to shift in and take a look at utility tokens like XRP, and there's others out there, but utility tokens, and moving away so much from kind of like what you mentioned earlier is what we've seen in the DeFi space? Do you think there's any movement coming from there, or is it just all institution?
Um, I think there's definitely going to be more people and more sophisticated investors stepping in. I think generally, when you look at a lot of the people in XRP, they're a lot different than a lot of the people of the rest of the cryptocurrency industry. And I think it's more of a sophistication thing than anything else. A lot of people in the rest of the cryptocurrency industry are materially younger, but what you'll notice is a lot of them don't have any net exposure in any other assets. They're new investors, and they kind of showed up because they liked the volatility that the cryptocurrency market had to offer. And we've seen a lot of those people actually now kind of shuffle around to different kinds of volatility, things like a lot of the betting markets and prediction
Hmm.
markets. I think
Right.
when you take a look at the average XRP investor, they're a little bit more sophisticated. A lot of them have had investments in other asset classes, and they've seen market cycles play out. And I think overall, what I'm really envisioning is a lot more sophisticated investors stepping into XRP as an asset for the thesis that could play out there. Not because price is going up at any given time, not because there's a whole bunch of rampant speculation and unsustainable products. I think what we're going to start to see is people for the first time are really going to understand that this technology can have a profound impact in the financial rails that currently make up the financial system.
Right.
And I think to understand that and see that, it just takes someone with a little bit more knowledge and a little bit more sophistication than purely betting on the current price going up or down.
Well, we had the our high net worth. I shouldn't say that. I should just say our private. We do these sessions on Sundays here in South Florida, and we did one yesterday. And it was ironic, because obviously I've, going into these, when you book them, you kind of think, oh, the market's going to be down. It's going to be a terrible. It was standing room only. The conversation that was being talked about was Bitcoin and XRP. Obviously, anybody that's following this space, they understand Bitcoin, but XRP was the asset that had been flying. And I think a lot of people, these are mostly business owners, like you said, people who have exposure to other asset classes, a lot of people who had been investing in gold, a lot of people who are real estate investors. And now they're looking at this capital rotation or the potential of capital rotation. And I think you might be right. We may see a whole new crop of investors that have not necessarily been in crypto, but they've been in other asset classes starting to move in here. And they look at XRP as one of the spots to land. Do you think for a brand new investor, because there's some of the you guys and ladies that are out there watching right now, Mickle, where would you look at XRP in a portfolio that might have, let's say, stocks? I won't throw bonds in there, but they're sitting on stocks, gold, and maybe businesses. Okay, that's a typical. I think, especially of what we saw and have been seeing in these webinars and these, or not webinars, these seminars. Where do you think the Holy Grail is in terms of portfolio mix?
Yeah, I think XRP is actually a very, very interesting unlock in terms of what it fills because it's obviously extremely early in the entire cryptocurrency story. So you have a very, very explosive growth asset that's also deeply ingrained in financial infrastructure and technology. One of the very cool things about XRP is it's kind of unlocking something that the internet has yet to disrupt. And the internet has disrupted almost every aspect of human society, but it really hasn't disrupted the financial infrastructure yet. So I think in terms of a growth asset, there is a very, very, very long runway and a huge kind of sector rotation that's going to happen as the internet continues to bleed into every aspect of human society. Just the efficiency unlock, the speed are enough for, I believe, a justification to just completely demolish the current rails and start to see blockchain technology incorporated at that level. I think the super interesting thing is, though, I think over the long run, as the growth story plays out, it has a whole nother catalyst as well in being an anti-inflationary decentralized commodity. And that's what's so interesting about XRP. In the very early stages, volatility is always going to be something that people need to be aware of and invest around. But over the long run, what we're seeing is that the United States is just going to keep printing more money, and they're going to keep buying back debt, and they're going to
Exactly.
keep ramming stimulus into the economy. An asset like XRP actually has the potential to really mature into something that represents a very similar thesis as Bitcoin as a store of value in ultrasound money because of its deflationary characteristics. So I always tell people one of the most important things you have to do as an investor is invest with size based on your confidence. Because as long as you continue to understand the asset better and build out your thesis, I think you can justify larger and larger portions of your portfolio going into that asset. But in these early stages, volatility is something that you need to understand. And if you're going to get panicked with volatility, then you're just going to have to make sure that you have a thesis that reflects the size you're going into. But I think this asset has an extremely long runway, and we already see multiple different characteristics developing for how it can offer some very unique pieces to a portfolio that I'm not sure how you can find anywhere else.
I was surprised. We did a survey, and of the owners that were out there, they had stocks, bonds, businesses, and real estate. And we asked them if you were going to invest in the top three assets on digital, whether it's XRP, Bitcoin, Ethereum, um, what would be your breakout of where you would rotate capital from? Mickle, where do you think they would rotate capital from?
Man, if they were rotating out, what I would do would probably be different what they would say. I feel like a lot of people always want to rotate out of equities because they feel like the equity market is overextended. Um, that would be my guess is where people would rotate out of. Me personally, it's a tough call. I would probably generally, just because I'm younger, be rotating more out of the real estate sector, just because I don't think there's as much upside in that one specifically. But I would guess it was the equity sector.
All right, so you're right. It was equities was number one, real estate was number two, but it was very close in terms of the percentages. We had 112 people in the room that did the survey, all high net worth, mostly business owners. They have a lot of assets out there. They're holding a lot of stocks. Some of them holding commercial property and even residential property to a certain extent. Doors, kind of rental property systems. But I was surprised that they would move. They did not want to rotate out of gold, and they wanted to rotate into digital assets. That was the number one area that they were looking to go out of, with equities first and real estate right behind it. So you're dead on.
I've
Why?
always
Okay, so
found
you're looking at the S&P right now. You see this little bit of a fall off here over the last week. Some people could say, well, this is and maybe the beginning of a correction. Tom Lee's been calling for this for quite some time. It's not a big correction right now, but if you were to see that top and you were to pull down into a sizable correction, this would make the thesis pretty solid about being early on in the rotation of these kinds of investments into digital assets. Do you think that's the case right now?
I think it's certainly fueling it. I think Generally, I think what people look at is the S&P 500 and a lot of the indexes at all-time highs, and the cryptocurrency market has lagged behind a lot. I mean, um, just being able to understand that over the long run, these markets are probably going to trade with some level of parity, right? Because there's only one group of people who's deploying capital at the end of the day, and it's humans on Wall Street. And when you take a look at how these markets trade over the long run, generally you have waves where some will go to some all-time highs and some assets will be lagging. But I think over the long run, the amount of stimulus, the amount of money printing, and overall bullishness on the overall GDP and economic growth brings a lot of new money and a lot of new flows into these assets. So I think a lot of people are looking at it and saying, hey, there's a big catch-up trade here. And because the market's at all-time highs, I'm going to cut some profits here and put it into the cryptocurrency industry so I can play that as it catches back up. Generally, I don't like to look at equities with such a broad brush. I think there's so many sectors that are probably tremendously undervalued right now, and quite a few that are probably pretty overvalued. So I understand with the market at all-time highs, people look at it like, oh, I have to exit equities. I'm normally like to be a little bit more precise with it in terms of what are those assets that people are actually exiting. I think what you're probably seeing is a lot of AI profits right now, and a lot of people who've got a lot of those flyers coming out and looking to relocate that. But the real estate one makes a ton of sense as well, because um, what I'm seeing from a lot of the big real estate people I follow is a lot of those people are just selling off a lot of their properties because it's so burdensome to manage them. There's so much regulation. It just becomes one of those things. It's like, well, if you can go get like a 5 to 6% rate in long-term treasuries versus doing all the work it takes to manage these properties. I mean, there's a lot
Exactly.
of markets out there, especially when you look at places like New York and California, where like you're barely even scraping by on those margins with all the work and that it takes to run these real estate markets. So I wouldn't be surprised if people are beginning to get a little fed up with how hard the money is in real estate in comparison to some of these gains in these other assets, which is why I probably thought those were my top two that people wanted to rotate out of.
Yeah, you look at what we could be in the midst of right now, which is about a 6 to 7% correction if it comes back into the 7,300 range. Talking about the S&P 500 as we look at the chart right now, and that's with just a 6% correction off that top. That many people were kind of pushing to the 8,000, and it could still happen. Don't get me wrong. This is something that could still rotate into the fall. Midterms will have a lot to do, I think, on how the economy responds. But to your point, the liquidity side of digital assets are getting front and center, especially when you look at the people like Mike Seelig, who has been out there saying this right here. If we don't get a market structure bill, doesn't matter. We're not afraid to use the authority we already have, meaning they are going to put this thing into play one way or another. So the CFTC appears to be all in. The SEC most likely, when you looked at the update of the rules last week by um, Paul Atkins, and the two buckets, the 75 million bucket and the $5 million requirements. What did you make of those? Some of the parameters that were put out last week by the SEC.
I mean, um, I think broadly, it's just so good to see this type of action. Like outside of the micro policy that they're pushing out there, there's a couple big things that I think are extremely notable. One is that like every single position in the government, whether it's the Treasury, whether it's the SEC, whether it's the CFTC, whether it's the OCC, these are all very, very, very pro crypto people at the top. And for me, seeing that change in this no longer just being us as the outside speculators saying this technology is going to be really important and just preaching that to the world, to now seeing people in extremely important roles pushing out guidance and pushing out regulation to make this happen um is so important. I think the SEC and CFTC are essentially pigeonholing the Democrats right now in a tough issue. It's like, hey, if you don't vote yes to clarity, then Trump gets to push forward whatever rules that he wants without the same representation or without the same rulemaking processes you would have otherwise. So I think it's yet to be seen which one will ultimately work. I think the CFTC and SEC are going to push out some pretty lax rules, which is what we've already sort of seen. And I think to a certain degree, they're fine with those rules. They're happy with them. But I think it's really going to force the Democrats to the table and saying, "Whoa, whoa, 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 whoa! This is way worse for us than something that we would have wanted in the Clarity Act," and it
Hmm.
might force them back to the table. So I see this as a win-win for the cryptocurrency investor. Whether specific rules here or there get passed, it's not real. I don't think it really matters over the long run. Clarity is the more important thing. And now I think we have two great ways to do it that have a high likelihood of passing.
Well, that's the thing. Clarity may get, well, I think clarity is going to get decided either way. I
Yeah.
think the market
Yeah,
is hedging
absolutely.
this, whether you get the vote in Congress or you get the CFTC and the SEC essentially doing things like this. One of the things that I highlighted here off the SEC's announcement last week was this is a one-time exemption that would permit offerings, people or projects up to 5 million during a 4-year period. The second exemption would permit offerings up to 75 million during each 12-month period. So, and both exemption issuers would be required to make certain narratives disclose. The 5 million, though, I was surprised at the lack of requirement because it was almost like a hall pass for anybody that was building. So it seemed to foster innovation. I was a little concerned that it may not necessarily be protecting investors, but then I look at seed capital and the way that's done in the business side, it's kind of the same way. So that is a bit concerning, but at the same time, I think the advantage that this is going to bring, which could be even more so from the CFTC in terms of how they start to define, investment contracts and securities. So interesting times ahead. With what you see so far, because Brad Garlinghouse was at that CFTC meeting last week. Obviously, he was at the White House as well. Ripple clearly sees a pathway for this. How does this help Ripple if the CFTC or the SEC have to result to rulemaking?
Yeah, I mean, either way, I just think what Ripple wants to be able to point to their partners, whether or not every single detail is in there, right? They want to be able to say, "Hey, here are the rules we're following. Here's where it's carved out. This is the clarity we have. This is how you're supposed to report on stuff." Like they just need to be able to point to something and say, "Hey, this is now covered." And I actually think just the narrative of something being passed is going to be enough for a lot of these people to say, "Okay, like now we can step into this industry." I don't think anyone's expecting that every single piece of it's going to be covered. It's more of just a broad sort of stroke of the brush and saying, "Hey, we can actually start putting serious capital and initiatives into building this stuff out." Personally, I always think that the regulatory agencies putting rules through are going to likely be better for pro innovation because they're probably going to be a little broad. They're not going to be as specific in like some of the things that are trying to be pushed to, I don't know, attack one side or the other. But at the same time, it's also less sticky, right? Because if another Democrat gets in power and they decide they want the SEC and CFTC to reverse a lot of this stuff, it could be kind of like a tug of war over the long run. But like I said, I think if either of these go forward, right, either the Clarity Act or we get SEC and CFTC rulemaking, it's going to be a huge unlock for the entire industry. So for me, it's more of the fact that we have two great options here to get this over the finish line. I think they are full speed ahead in getting one of them done. And I think that's the important piece, right? I think a lot of people have said for years, it doesn't matter if the rules are perfect. It doesn't even necessarily matter if we don't get everything we want. The point is we are making tremendous progress in advancing this technology forward and cementing it in a place in American history as a disruptive financial innovation that's being adopted. So I think that's the main thing that markets and companies want to see in here. And how we go about it, whether it's Clarity or CFTC and SEC, Clarity is probably better for the long run and not getting rules reversed. SEC, CFTC is probably better in the short term for a bit more flexibility. But I think that's more of the smaller company kinds of things. I think Ripple probably runs with anything that gets passed with a lot of velocity.
Well, okay. So anything that gets passed, including rulemaking, is what you're saying.
Yes.
Yeah. Okay. Yeah. Because I think that, all right, there's a couple of analysis that if you look at the way the structure of these votes have stalled, we've had senators come out on both sides that are, they're worried about ethics. They've got this concern, that concern. Likelihood is this is going to get pushed. Now you have the probability of Galaxy Research saying that they cut their estimate. And listen, Galaxy, when you look at what Novorats has been talking about, he's been very pro that this is going to get through. But based on what we're seeing now in the rulemaking category, meaning SEC, CFTC coming out and being very pro industry, my question is, what if they don't? And when I say they, what if the crypto industry simply says, we don't really want it to pass now? The rules of the road are going to get formatted regardless, and we don't have to give up all the things that the banks have been asking for and trying to extract. What does that do to the banking industry if we do see that become reality?
Well, this is the fun thing about this because everything just got flipped on all the opposition's head because now suddenly they're like, oh, this clarity bill is coming through. We need to pump the brakes on this because we don't want like all of this adoption to happen. But now there's this other path coming, right? That's significantly worse for them. Like the CFTC and SEC are not going to be as strict on the ethics clause. They're not going to be as strict on the stable coin yield and stuff. So now all these banks and the Democrats who are pushing so hard against the clarity bill are now seeing this much worse option that they can't stop and can't control. In my opinion, this should only increase the chances that the Clarity Act is going to pass. So I actually think this separate initiative should increase the chance that the Clarity Act will pass rather than decrease it, because I think it's putting pressure, an immense amount of pressure on the parties that are the biggest opposition to the Clarity Act. I don't know if the crypto industry and the Republicans are going to jump ship and now support like completely flip. I think there's a lot of Republicans who are probably already signed on to this thing and are just going to vote yes at this point because what I've heard is a lot of people just want this to get over the finish line so they can stop hearing about it. And I think the other piece is there are going to be cryptocurrency companies, specifically like a Coinbase, who the yield issue is really important to
Yeah.
them. But
Well,
I
they have it
also
now.
think the long-term protection that the Clarity Act offers, rather than Democrats taking control of the SEC and CFTC, is still going to be extremely appetizing. So, in my opinion, this just puts a lot of pressure on the parties who have been resisting the Clarity Act. And I don't know how, in their way of looking at things, for them who are more like, hey, put the brakes on everything, that this rulemaking by the CFTC and SEC would be significantly worse for what their objectives are than just going back and saying, okay, let's push the Clarity Act.
Okay, so I'm glad that you're positive in the sense you think that's happened. I'm looking at the poly market right now. It has, if you look at the last week, this is now dropped down to, what are we at, a 17% chance after a little bit of a rise this morning. And this had a high of around 28 last week as we were starting to hear a lot of these. The summit was happening at the White House, the CFTC meeting, obviously. You look at the 1 month, this has been a trend down for quite some time. So I don't know, man. I'm a little bit of a conspiracy theorist, you know that. Why wouldn't Trump use this against the Democrats in the midterms? I mean, this is easily lasting till September to get this done. So it's fresh on the mind, which is always the key on voters. Why wouldn't? Why wouldn't he?
I mean, that's the thing that I don't like. The thing, even with the poly market odds, is like the odds didn't even really go up at all when they scheduled the vote for September 15th. And like, there's like this big kind of idea out there that I totally disagree with, that like, oh, well, there's just not going to be any work done on this thing after this August recess because everyone's going to be solely focused on midterms. But like, this is going to be a big midterm issue. Like, we talked about so long after Trump's election, how big the crypto voter was in supporting him and all the candidates who supported crypto. So, like, people are making it seem like this is a very niche issue in the grand scheme of things, which is true. It's not the biggest issue people are dealing with, but it's got something very important to it. And that very important thing is that a lot of the mainstream issues, those voters are likely going out and voting on those issues regardless. The cryptocurrency voter, there is no anti-crypto voter. So you have a huge unlock
Right.
of people who are going to vote for you if you're seen as pro crypto. And I think that's going to be something that plays a role in midterms. And people are going to want to be able to campaign on the fact that they got clarity around the corner and they voted yes to
Mhm.
it because there's not any kind of anti crypto voter they have to be worried about. So I don't know. I've been surprised with how poly market's been trading, but at the same time, I'm not all that surprised with where crypto prices have been. I think the market is generally pessimistic. I think if we were at all-time highs, the odds would be significantly higher of Clarity Act passing, and that really has nothing to do with it. And I also think there's been a miscalculation on what this vote actually means for people
Mhm.
who are up for reelection at midterms. I think the general consensus was that there was going to be absolutely no work done on this after recess. And if it's not done before the recess, it's dead in the water. And now we're having a vote after recess to push this to the House floor. So, in my opinion, I don't think things are necessarily being properly factored in. I think general crypto sentiment is still playing a part in where the odds are. And I think the regulatory agencies kind of pushing a backdoor through that's worse for the opposing side to the Clarity Act is just another reason to catalyze the previous no voter to be a yes voter because at the end of the day, Trump's going to be able to do whatever he wants if the CFTC and SEC pass their rules. So I think all of this should have probably increased the odds a decent amount. At least they did, in my opinion. But we'll see how the market reacts as we get a bit closer. And I'm really curious to see how the market reacts if we get another bump up in price. If
Yeah.
we see price really shifting sentiment here and the odds of clarity passing, um, I think that's probably going to tell us a lot about where the data is even coming from in some of these things in terms of how likely it is to pass.
All right. So that's all the bullish. I think these are all bullish signals that we've been watching for quite some time and how this plays out. I think the nuance that has come into the market has been the consistency of both the SEC and the CFTC to simply say that we're going to go ahead regardless. Because I thought in the beginning, I felt like, they probably want to wait and see, which is kind of the case, but they are putting much more pressure on the hand of Congress now. So maybe to your point, that could be enough to get these Congress people off center and into a vote on this. With that being the case, you look at the market as it sets right now. There are some people out there that are actually starting to set in shorts right now. So this is winter mute. They went in and they're sitting on 109 mil in shorts on ETH, Bitcoin, Solana, Hyperliquid, and XRP. Right now, they're down 5 mil, 6 mil almost. What do you think about this? Do you think this was the right call? Is it just working with the market flow? What's your feeling?
Think there's potential that we could have sort of a shakeout prior to a really big recapitalization of the cryptocurrency market. I mean, anything's obviously possible, and sometimes I feel like the most painful thing in crypto is always what ends up being happening, and I think that would be pretty painful for people if there was one big last market wipeout. So I wouldn't take it off the table. Um, but at the same point, just the velocity that we see the market going up at is a big deal because this is really the first time since we had that big ramp down over the past last year that we've really seen all the bottoming indicators that people are watching for, max oversoldness, max bearishness, really flip and flip fast and with volatility. And to me, I've seen these markets bottom a lot in my course in this market, and typically, I don't know, it just seems to me like that was probably the moment that we hit a bottom. So I don't necessarily think that would be my bet on where the market goes. Maybe they can push things down a little bit, but I think a lot of people are watching the market run away from them right now quite a bit and would be happy to eat up any dips. I think a lot of people are probably wishing they bought a little bit more $1 XRP. I think a lot of people are probably wishing they got a little bit more 59K Bitcoin. And I think there's going to be a lot of buyers because for the first time, people are finally seeing that volatility come back into the market and realize how quickly things can turn around. I think that's going to put a lot more buy volume on any dips when, as people now see, hey, this thing can turn around and it can turn around really quick. Maybe I don't want to be waiting 6 months before I deploy new capital.
So, Mickle, what do you make of the gold movement? You've got China right now doing another 88 tons. and this is coming through the OTC market. That was in May and June, which would push their reserves to like 2,400 tons. You have central banks buying it. Gold, of course, also up with Bitcoin and XRP right now. Many people concerned that we're going to continue to see the dollar devaluation. Is gold a play that you are looking at in your portfolio at all?
Not personally me. I don't dislike the play on gold or any precious metals at all. Um, for me, it's really just because all the interesting characteristics of gold, in my opinion, can be replicated through crypto assets, and crypto assets also have a whole lot more they can bring to the table than something like gold. Um, and actually, like, even when I really think to where I see the future and like I have a feeling that it's gonna get exponentially easier with more tech and to bring more gold out of the ground and find more gold. So it's actually got a bit of inflation to it that not a lot of people talk about. Overall, I love the gold play. I think it's gonna do really well. I think we have so much debt in the United States right now. The only way to get rid of the debt is essentially to inflate it away. I think there's more inflation coming over the long run.
Hmm.
Um, I just, for me, it's like I see such a bright potential in these crypto assets to solve a lot of the things that gold could never do in terms of a liquidity profile, in terms of a speed profile. That if I'm going to be looking for anti-inflationary assets or deflationary assets, me personally, because of my age and because of my risk profile, I would rather make that bet in digital assets. But I think gold and precious metals are going to continue to do very well. I just think I have more upside in the digital asset market.
Yeah. So upside for that, if you're trying to look at diversification, like a lot of people that watch the show, I think is probably pushing into multiple assets. And I get it that you guys, maybe in that boat. What about, okay, so let's talk a little bit about ETFs. You had Goldman Sachs coming in. This is kind of an interesting situation. They disclosed another 86 million. This across five different ETFs, XRP ETFs. That was in Q2. So do you think we'll see more of this, starting to see real traditional moving into these XRP ETFs? What are your thoughts?
Yeah, I think we're going to continue to see a lot of that. I think um, a lot of these ETFs are going to be sold by financial professionals and financial advisors. And
Yeah.
I just think the story of XRP, Ripple's involvement, the build out, what they're aiming for is going to be a narrative that just makes a lot of sense. I mean, I know you see it for whatever reason, right? A lot of traditional market participants have a hard time understanding the crypto story, but the XRP story and what Ripple is doing just really clicks with that big money. It really clicks with a lot of those people inside of the financial system. And I just think going into really a build out of the American crypto infrastructure, there might not be a brighter spot in the market than Ripple and XRP. So
Hmm.
I only expect this to really continue. I think what we've seen is XRP has been extremely sticky through time and history. It's been extremely strong in terms of the people involved with it. Brad Garlinghouse has done an excellent job of positioning Ripple as that American infrastructure player for the crypto industry. And I think those are all really important things when it comes to selling and distributing an ETF. I think a lot of these other things, um, while still can have success in the ETF market, might be a lot more difficult for people in the traditional market to really wrap their head around. There's just been a lot more skepticism amongst the overall DeFi market in terms of what we've seen the build out in right now. There's been a lot more skepticism in a lot of the more tail assets. And a lot of people are really looking for an answer to what can this do today? What can this do to solve my problems as a business? And I think XRP does a really good job of that. So I think it's just going to keep making sense for more of these ETFs to keep rolling out. I think that's why throughout this entire bear market, all these ETFs saw net outflows, and we continue to see net inflows in XRP.
Yeah, exactly. Well, I had Stephen McClurg on last week, and he was looking at, first of all, his statement was that he wasn't going to be shocked in 12 months that we could see XRP well above $3 or $4. So another 100% move from where we're sitting at right now inside 12 months. That coming from an ETF, manager. So this is a guy that understands the market flow and where this might end up coming from. And of course, the catalyst could continue to be more institutional capital coming this way. So I think it might be. Would you agree with him? Do you feel like that might be a possible target for next year?
Yeah, absolutely. I think um, overall, I mean, the more large people, the more ETFs, the more Wall Street we have, even telling the story is going to go such a long way in terms of credibility. I mean, for the first time ever, people are now getting this information from the financial institutions that they've trusted for the last 25 to 30 years. It's a huge credibility upgrade, whether that credibility upgrade comes from Wall Street, whether it comes from the crypto industry being next to President Trump, whether it comes from clarity or whether it comes from every single major financial regulator now talking about cryptocurrency. People are starting to say, hey, this is the real deal. This is no longer just a bunch of niche group of podcasters talking about the potential of this industry. This is now the financial giants reconfirming the things that those people have said for years. And I think that's really going to shake people's view up and say, oh, now it seems like there's not nearly the same level of pushback from the people who matter. In fact, now they're all in on this. And I think that is going to change the paradigm for the institutionalization of the investment side in this asset class.
Yeah, well, and I think you're right. The key here is we're going to start to see smart money moving in this direction. And with smart money, typically that drives the market, which obviously gets in retail, high net worth individuals. Then you start to see bull markets start to form from that point forward. You look at the end of summer, here we are recording this in August of 2026. Mickle, you look at the end of this year, there's still a lot of people pointing to post October for a real market move. Would you agree with that, or do you think it's more of a 27 move?
It's a good question. I think a lot of it is going to depend, unfortunately, on some external factors here. I think if we see a big ramp up, obviously, in some of the stuff that's going on in the Middle East, I think that would be negative. I think
Yeah,
if, for whatever reason, you saw a massive increase in inflation, that probably wouldn't be that great for the cryptocurrency market. But on the other side of that, if you see that opposite, if you saw de-escalation in the Middle East, if you saw a situation where inflation continued to come in low or in the low threes to high twos, and especially if you see the Treasury continuing to add stimulus to the market and sort of defy the Fed, that's really what kicked off
that's a
the
big one.
market just a couple of days ago. So I think there's probably a decent amount of external catalysts outside of this industry that could either push us up a lot higher prior to October or keep us kind of trading where we are or even down a little bit. But the truth is generally, I think towards the back end of this year, this market extremely suppressed, this market extremely held back, has a lot of catching up to do. And I think that's going to be happening going through all of the end of 2026 and probably into a large portion of 2027. And then we'll just have to see how the build out is. Is there continued acceleration? Is there continued adoption? Or do we need to hit another roadblock? But overall, just because of how depressed the market is, I think it's going to be hard for the negative catalyst to provide as much weight on the market than the positive catalysts that I think are probably going to propel us upward.
Yeah, you've got Ripple. Obviously, they got their approval through the full EU authorization for Mika. That, of course, happened last month. You look at that, we could start to see a rollout. I mean, this is going to be 30 different countries now that can actually go in and participate in terms of whether you want to pay out via Ripple payments. You could see all sorts of creative fintech starting to go in this direction in 30 different nations out there. Is that a big enough of a market in the EU to drive price, do you think? Or do you feel like still is going to be the US oriented markets?
I think it can. I think it can have an impact with the caveat that the Holy Grail is always going to be the United States market
Yeah.
for financial capacity. Um, I think a build out in the EU adds a lot of credibility and adds a lot to the global adoption story. But the United States is the financial hub of the entire world, and that's the first place trophy that's really going to matter. So, I think ultimately what people will start saying is if we do see significant build out in the EU, I think people are going to start to see the writing on the wall in terms of Ripple likely winning in the US as well. And I think that's just going to play into that story also. So I think it can have a big impact on price from the perception, of course, that hey, if they're winning in the EU, if they're winning in Japan, if they're winning in South Korea, if they're winning in some of these other nations, well, first of all, the vast majority of the cryptocurrency industry hasn't even really tried to build out there.
Right.
Ripple just has the firepower to do so. But then if they start winning there and they start to really ramp up in those places, um, I mean, get ready. The United States is going to be a huge and fast follow through. And my last point here that kind of worked out well for Ripple is when Ripple got put in the SEC case, they were really forced to build a lot of offshore kind of opportunities out.
Yeah.
But there was no one winning in the United States because the United States was really at a standstill. Um, so they spent a lot of time building this global brand and global presence. And I kind of think that's typically the harder place to build it. That's a lot more complex. You have to deal with a lot of things you're not used to. You have to break down a lot of different language barriers, regulatory barriers, and cultural barriers. I actually think Ripple kind of did a lot of the hard stuff first. And I believe going into the United States market is probably going to be a piece of cake in comparison to some of the things they've been doing globally.
When you look at the current situation right now with, because this just released obviously today, talking about the Treasury unleashing another trillion in their war chest to essentially rescue the bond market. I think that's like 250 times their, what is it, 4 billion for a single long-term bond buyback. So, first of all, how can you even keep pace at this if you have to continuously rescue the bond market going into this? And what impact does this have on the dollar, hence on digital assets?
Yeah, I mean, I don't see any way the dollar isn't significantly devalued. Uh, I mean, yeah, over the course of the rest of our history, right? Like there will be times I think where the dollar gets a bit stronger for short periods of time. But overall, I think the biggest thing I'm paying attention to is the debt. And the debt has to be inflated away. I don't see any other way to get around it. There has to be a tremendous amount of growth and inflation for the United States to kind of get out of this situation. And what the Treasury does, that's a tough thing to say. I mean, a lot of their operations they've gone in on have already sort of been erased by the market. So
Hmm.
the Treasury is kind of firing some guns at this thing, and it's not flinching. Um, it's I don't know if I have a fully developed thought yet on what that means, but I think what it does mean for sure is that the Treasury is very willing to act. And for me, that lets me think that the market's going to assume that there's bailouts around the corner, that there's more stimulus coming if ever needed, that money printing is the first resort for fixing anything. And I think all of those things bode really, really well for the cryptocurrency market. It's one of the biggest reasons why I think it's almost impossible to be a long-term bear on the equity market or the cryptocurrency market because even if there's no fundamental growth in really anything, just the amount at which money's being devalued, it's at least a hedge against that. So, I mean, I think all of this is extremely bullish for markets. And I think it's one of the reasons why being a long-term bull always wins. Because if you don't have to bet on any
Well,
single asset or
eventually,
any
yeah.
single
It's
company,
how long you
you
hold
can
the asset.
you can certainly bet the United States government is going to keep devaluing the currency.
Yeah. I think long-term yields, and if you look at the 30-year or the 10-year, yeah, that's downward pressure for sure. Where this might actually provide some relief is in mortgage rates and loans. So that could get interesting because they all benchmark the fixed mortgage rates benchmark off the 10-year Treasury right now. As far as bullish for crypto, I'm still on the fence that this is short term because they'd have to do a lot of reserve liquidity, which is what they're doing right now. But I don't know.
They've
I
got
guess for the
problems in
dollar,
Japan. I mean, there
yeah.
are there are bubbles, and I don't mean necessarily bubbles in the terms of like a super hot market, but there are issues kind of bubbling up in different places all over. And I just think that's really what these crypto assets were made to solve at a certain point at the end of the day. If you look at why Bitcoin was created, it was created as a kind of a middle finger to the financial crisis in 2008, and kind of the belief that these central planners won't be able to just lead us to the utopia that I think they want to. And I think cryptocurrencies, as that opt out, I don't know if we could be going into a better situation for that being the bull case. I think it might take a little bit for people
Yeah.
to realize the importance of that. I think it might take a little bit for people to say, okay, as I talked about earlier, not only is this a growth asset, but it has these qualities associated with it as well that is like ultrasound money and
Yeah, exactly.
prevention of debasement. I think a lot of people might at first be like, oh, it's a growth asset, the market's going down, you have these issues, we have to sell into it. But those characteristics cannot be broken over the long run. And I think it's a huge tailwind for where we're going in terms of the debt problem, in terms of
Bingo.
inflation, in terms of the treasury market. It's a really, really, really powerful opt out. And I think that's always been one of the biggest value propositions of cryptocurrencies.
Yeah, for sure. Well, and I think this is the thing that everybody watches the show for, but they're really understanding and trying to get their head around what this macro environment looks like, because it is changing literally beneath our feet right now. I don't think, has there ever been a time other than maybe the 1980s where you saw this kind of influx on where interest rates were heading, where inflation was going? Really, that was before we really started printing money too. You have to remember that. So imagine where we would be had we not started printing.
You know, I always joke, it's so funny because I really got like heavily involved in markets in 2018. And it's been a crazy ride, man. I mean, like I always tell people like I'm a newer investor and stuff like that, especially in comparison to the people I talk with. But they always joke, it's like, well, you certainly have not like missed out on like your fair share of these big game-changing moments. I mean, since the C19 event, you know, things have just been a huge shakeup in the market. And
Yeah.
as difficult as it has been to navigate at times, it really has been, I think, an extremely exciting time to be an investor. And and it's not all bad either. We obviously have these huge issues going on in terms of inflation, in terms of the treasury market and these things. But there's also so much exciting opportunity. The pace in which technology is moving is truly
By
something
far.
that I believe is
Yeah.
gonna
By far,
change
this is the
everything.
best
So
time.
it's fun.
Yeah, this is the best time. For all you guys that are out there thinking you don't have opportunities, that is BS, because this to me, listen, I've lived through now 3 cycles of unbelievable, growing up in the 80s, seeing my own father dealing with that with his businesses, going into college at the birth of the internet, seeing, dot bomb literally in my face. I mean, that was dunking on me. And then, of course, what we are seeing right now. So I think right now we are in a very interesting time. And for you guys that if you can't make money in this market, just on pure volatility, there is something wrong. So for sure. But I get it. Everybody likes to buy an asset and hold it. If you're doing that 10 years, really doesn't matter what the market's doing today. It's where it's
Solid
going to be in
bets,
10
good
years.
technology, great companies, great assets over the long run. I mean,
Always wins.
it's hard to go wrong doing that.
Yeah, always wins. All right, Mickle, it was good seeing you today. Thanks so much for coming in. We appreciate it.
Yeah, absolutely. Can't wait to come on again. And hopefully the next time we talk, we got a $2 XRP.
There you go. Boom. We will cover this and a lot more. If you guys have people that you think in the community that need to be on the show, drop some comments down below. Our team will be, of course, scouring those. It's how we bring on new guests and look at our lineup. Of course, you guys can reach Mickle out there on YouTube. We'll drop a link down below as well. We'll see you guys later on the XRP Pod. Take care.